Hello, Oracles. Well, we ended up with a red day today. It wasn't a horrible red day, but it was red. I was definitely anticipating green, especially after how we had closed last Friday. But let's get into some of the reasons why we ended up being red today. Well, part of the reason was because over in Europe, their inflation came in higher than expected. And so that kind of put a little bit of a damper on the market altogether, which then in turn pulled us back. Oil prices are going up. The 10-year treasury is going up. My dad had actually pointed out the fact that oil prices are going up because in a market that we're in right now, there's not a lot of places that people are making money. So anytime there is a place that people see that they can make money in, they're going to put their money there. Right now, it unfortunately happens to be oil. So because oil is going up and there's the demand and all the issues going on with oil with Ukraine and Russia, oil prices are going up. So people are like, well, I'll put my money into oil because the oil prices are going up. And when they do that, they take their money out of all the stocks and other investments that they have, and they start to filter it into oil. So what's going to end up happening is when the oil prices start to come down or this whole entire wave is over, which we are anticipating, I mean, even the CEOs from the oil companies had mentioned it in their earnings calls, when this ends, that's when everything's going to turn around and all the money that was in oil is now going to get put back into stocks and other investments. So we just need to wait this out. But again, if you're following the flows and the cycles of this is a good thing because that means that yes, money is going to flow back into these stocks that have been depressed. And what ends up happening now? Well, if you buy them now, knowing that they're going to cycle back up, huge buying opportunity. So if you're looking at some stocks to get into, knowing that we're potentially getting into a recession, knowing that there could be a pullback in the market further, you want to look at what stocks are going to be profitable, what stocks have a high customer base. These are the stocks that you want to get into, the ones that are not going to die if we get into dire straits in the economy. And so obviously for us, Tesla is a big one, Apple, Google, some of the bigger name stocks are a good place to get into right now because the stocks are depressed. And when people start taking their money out of oil, those big name companies are the companies that they're going to be putting their money back into. And then to top it all off, another place that people are making money right now is shorting. Because think about it, if people are taking their money out of the stocks to put them into oil, that means that they know that the stock prices are going to come down. So to make money on the stock prices coming down, they're going to short them. That's why short sellers have made over $7 billion in Tesla this year because they've been shorting the crap out of it. You know, and Tesla's not the only one. There's a lot of other stocks that are getting shorted. And it's easier now to short stocks than it used to be. There's a lot of different ETFs. There's short ETFs for a lot of different things out there. There's a lot of different funds that are shorting funds. So for people who can't play options, you know, because they don't have that kind of money like I don't, you know, I don't want to short stocks anyway, but these people can get into funds that will do shorting for them so they can still get some benefit and make some profits on shorting during times like this. I think that has magnified a lot of the pullback that we have seen. And so it just goes hand in hand. So a lot of people are shorting, which brings the stocks down. People in turn are taking their money out and putting it into oil to make money there. So people are making money in oil and people are making money in shorting. So eventually that's going to turn around. So what's going to end up happening is once oil starts, you know, that whole thing fades away, people are going to take their money out, put it into bigger stocks, and then the shorts, because the money is coming back in, all of those shorts are going to go away as well, and the stocks will be able to elevate even faster. So I still don't think it's going to be a skyrocket back up, but this is going to be a good sign that we are cycling. This is a cycle that we're going through, which means that all of these stocks will cycle back up, meaning that Tesla and these stocks that we talk about are huge buying opportunities now because they're holding up relatively well considering what's going on. So when we come out of this, they will be able to take off. And so looking at what we have coming up going forward, we've got the CPI on June 10th. Now in Europe, they were anticipating a 7.8%. They got an 8.1%. So that is a significant miss when it comes to their inflation. I don't know what the estimates are for ours yet. I will check those at the beginning of next week to get a closer estimate to see what we're looking for. But I think a lot of fears out here are estimates are now coming in and the true numbers are coming in higher than estimates. So is inflation, not going in the direction that the Fed wants it? Does this mean we're going to have to get a more hawkish Fed and raising rates faster? Because we've been up and down, the Fed's been hawkish, and then the Fed's like, oh, well, maybe we can be more dovish and not raise as much. A lot of people are thinking we don't need to because inventories are high. A lot of different questions that are out there, and I think we're going to get some of the answers next week. But unfortunately, when you get stuff like this coming out of the EU, and then you get a lot of speculation that goes along with it, that speculation leads to a lot of uncertainty. The market does not like uncertainty, and I think that's why we saw a bit of the sell-off today. Again, it wasn't very red, but it was definitely, red. We didn't go green, we were red, but it's not horrible. And today's trading reminded me a lot of the feelings that I had seen in the past, where it was, kind of swung down, then it swung up, and then came back down, and we ended up kind of level on the day. Kind of seems like a lot of breath holding. Like people are just anticipating and saying, all right, well, what is the information we're going to get from our CPI? What is the information we're going to get from our Fed? And until that time comes around, we're going to kind of hold our money on the sidelines and not dump a lot in. Seems like last week we got a lot of institutional money coming back into the market, which was great news. But it's still not, all of the money coming back in. It's just little bits. This is like the institutions buying little bits at the time, and last week was one of those chunks of little bits that they put money in. Now they're just waiting. So now it's more retail buying that's going up and down, and that's kind of fluctuating the market slightly and then ending us up flat. And so now we've got 10 days until our CPI data comes out. Let me know in the comments below, do you think that we are going to meet or beat expectations? Or do you think we are going to miss like the EU did and the Fed is going to have to go more hawkish? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord channel. That link is in the description below as well. Thank you all so much. Have a great one.